Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking energy. Crude oil extremely interesting, with WTI finishing up almost 1% after running down and touching 64.22, finishing around 65.30 and change. And it was very interesting because it was a late day rally in WTI crude that was not followed by Brent. So let's start by talking about Brent with OPEC. As a Bloomberg story reports, the U.S. has actually asked OPEC, specifically Saudi Arabia, to up production by 1 million barrels a day in order to ease the pressure at the gas pump for U.S. consumers. We don't necessarily have confirmation on that, although Brent did respond that way. But WTI sort of, toward the end of the day, diverged from that and got into a decent rally, which has a little bit to do with that spread. The spread between Brent and WTI had reached out all the way to $12.60. It came all the way down to $9.60 earlier, approaching $9 on the lows today. And that spread actually matters, because when that spread widens, WTI gets more international demand. The way that crude oil is priced, and I've talked about this before, is it's priced without transport in it. And because WTI is landlocked, the spread between Brent and WTI matters when it blows out to those levels. And the spread is starting to come in, which again is showing demand for WTI and less demand for Brent. So you pile that on with the alleged request by the U.S. to ask OPEC to increase production, and you're getting that divergence, which is not typical, between Brent and WTI. Again, Brent was up almost 1% today, with WTI down a little over 25 basis points. Again, that's down. So Brent down, WTI up. And then the dollar was sideways, steady as we call it, pretty much unchanged. The dollar, all else equal, won't affect commodities in either direction if it doesn't move. The dollar trend is still kind of in place, but unless we get an overtly strong dollar, which would push WTI lower, again, outside of expectations, you will see the dollar not having much of an effect on crude oil, because there's just way too much outside influence into crude oil. That natural dollar effect on commodities will always be there, but you always have to think that that's all else equal, and there's just too many outside factors in crude oil right now, including geopolitics, including tensions with Iran. Iran has been rumored to be upping their uranium production. That's again a news story that isn't technically confirmed, but it is being reported. So those geopolitical tensions will sort of blow out the water, the correlation, the inverse correlation between the dollar and crude oil. But an interesting divergence between Brent and WTI today. This is Bob Iaccino talking about an up WTI and a down Brent from the CME Group trading floor in Chicago.